Good morning, everyone, and welcome to Monday's Wavy Tunnel Pro Market Outlook, 13th of April 2026. Before we start, we need to ensure that we all read and understand the content of this disclaimer, that this presentation is for educational purposes only. Past performance does not equal future results. Please do not construe any information found here as advice or recommendations of any kind. So just complete reading that and understand that. And you all participants, the reason why you're here is you've joined the Wavy Tunnel Pro Accelerated Training, which Jody and the team have been providing you with over the last weeks, months and years. So what's going to happen this week from markets perspective? Obviously, I'm speaking to you on Sunday. I thought I would just give you a little bit more of a more comprehensive outline and a little bit more detail. So as we speak, and this is at 11 o'clock European time on Sunday morning, that there is no deal between the Americans and the Iranians. We will see what the market interpretation of that is when we start trading in a few hours' time. And so a settlement hasn't been agreed. The negotiations have stalled. They obviously still in negotiations, but just can't agree on the terms. So obviously it was a first round, and you don't really get anything substantive out of these initial meetings. So that's going to be the dominant issue for the week. So let's have a look and see what economic data is going to be available for us on Monday. Nothing too interesting. Always keep an eye out for the 3-month and 6-month bill auction rates to see where they come in at. Home sales, I don't think are a factor at this point in time. I think there's more pressing issues that the market is facing. So we would wait till Tuesday to sort of get into a little bit more of the nitty-gritty. Wednesday, again, not too much. Probably later when we start looking at the crude numbers and to see what the impacts have been because of all the supply issues that we are facing. Into Thursday, we start getting the jobless claims data. Again, nothing too dramatic in there. And Friday, nothing too much. So from a data perspective, there's going to be nothing. So you've got to be aware of tweets. Also, we have earnings, which will start on Monday. So you can always see banks are first to be out the blocks. Out they come. The first one that's going to possibly have an impact on markets would be Netflix on Thursday, but that would be it for about the week. So if we go to the markets, let's start with the euro, and we can still see that we are currently in this pullback because of the anticipation of peace. We have retraced to close on 50%. We can see that there's a congestion area in here. From a wavy tunnel perspective, we are above the wave and the tunnel. The wave hasn't completely turned around, so I would look for more chop between 118 and 116. So that for me would be the wider range. You can see the bungees are not on there, so let's get the bungees on there as well. And the market is indicating that we have transitioning towards the top. Now, I would suggest at the moment that we are going to struggle because there's no, and again, this is as we speak, and things can change very, very quickly. So again, in this zone here, we need to break it back above 118.5, 70 for the wave to sort of flick and reverse. So I would anticipate for Monday that we're probably going to see a pullback into the wave and the tunnel. So I would suggest that our opening range is going to be 16, 17, as long as there's nothing too dramatic. And we can have a look at let's try and narrow it down a little bit more and see where we are at. This, I would anticipate that we are going to, on the 4 hourly, come back into this 16 area. I think that we would see a retracement, which would then be there we are, 38 to 50% retracement. So I would look for levels around sort of 15 3/4, 16 for possible long entry trades. This, we can see we've got a trend line here. This, remember, this is a 4-hour chart, so slow moving. Bungees are at the top, and the oscillator is probably, if you get a slight pop above, going to give us some small divergence. I wouldn't look at that too materially at this point. I would look for news outcomes and to see how we behave at 116. So we've got 116, 118, 117.5. So we've narrowed it down a little bit more. On the hourly, we can see that we had breakout one trade. There it came. We pulled back. I'm going to show you an example of something a little bit later when we get onto futures, which is just the way that I manage fibs, and just to give you some information. So that was the first one. You know what I like to say that this has a 90% probability of being achieved, which it did. We retraced to the 61.8. We consolidated in this range. Again, what I would say is when we get into these, when you get into chop, and there's your chop, very difficult. Look, you can find trades because this is an hourly, so you could find trades in lower time frames, but this just helps you and assists you to give you key levels where you've got to dig a little bit deeper in your lower time frames. So always framing out your charts, always looking at the key levels, always making a note. You can leave alerts on your system so you don't have to be in front of your screen 24/7. You've done your work. You know what's going to happen when it gets to 115. You know that you're coming to see if there's a possible setup, to have a look at the risk reward and to see if there's a potential in the trade. Just then quickly glancing at all the indicators that are supplied and provided by the Wavy Tunnel system. So when I'm looking at this as well, I'm also thinking, well, I've had a 1, I've had a 2, I've had a 3, I've had a 4, and this is now exhausting. Exhausting doesn't mean it can't go higher, because anything can happen. But I would suggest for Monday, we're going to start and we are going to have an immediate pullback into this 1675 area. So we're going to be looking at a fill the gap trade on the hourly, and 16.5 is the first number I would be looking at, and anything above 17.25 I would be looking at potential sells. So now that we've narrowed it down, we keep drilling down. There we go. So we can see, you see what it looks like. That's a small box on the hourly. It just gets a little bit wider on the 15-minute. But here you can see where there's potential trades again. You have your first impulse higher. You have your bungees that are rolling over, and then so I know that this is one in its own, but this is a 1, 2, 3 with inside the 1. So you might even say that it's a 1, 2, 3, 4, 5 within the 1. Again, like I say, I'm not a purist when it comes to Elliott wave. I have my own method of looking at a chart and using the awesome oscillator to define what my 1, 2, 3 is. And so now I would expect a move to the bottom of this range. So 117. So I've now got 17, 17 and a half. Let's keep going. And I can see that if we got into this 17 area, that would be a fill the gap trade on the 5-minute chart. With the possibility of extending a little bit further into this zone, which comes back to the 15-minute tunnel. So I would expect, so you could look for trades around 117 for possible buys, and you can look at 117 and a half for possible sells in the euro on Monday. Obviously that would have actually manifested itself by the time you turn on in the US, unless you're watching from the open in my evening, my late night, your early evening, and the market open in Asia. So I would expect, given where we are politically, that this market the dollar is going to strengthen when the market opens, and we are going to see a pullback in these currencies. And so let's move on to sterling. So we've got the numbers for the euro, 17, 17 and a half. You can pick it, and then you've got the broader ones as well. So sterling, daily chart, it is what it is. It's now got to talk to us. So we're looking at 132, 135, which is too wide for us. I can see that the wave is trying to break through the tunnel and close below the tunnel. I think that's going to happen, and I think we're going to come down towards 130. But it'll probably stutter and stall at 132 first. So that's what's going to happen on Monday, or Monday in Asia, and your late night in New York when this market opens. We can see on the 4-hourly that we are, so let me just tidy this up so we can see, mark out these levels that I've marked on here. These are broadly, so this is your broad range. Do your work, do your analysis, set your alerts, and that will help you in then just framing your chart, because you can see now I'm going to have on the 4-hourly chart, we are looking to come lower. And we can see that this is looking for a completion around the 130. There's my target. But you can see I picked this up on the daily. So this is where everything coincides. I can see on this that we are, and this is a 4-hour chart, so this is going to be a very broad range. And you can see that we're trapped in here. Even if we extend this to the left, we have been stuck between 132 and 135 for a reasonable amount of time, a month and a half, while this market is looking for direction. And all of this would be, are we going to escalate? Are we going to de-escalate? And this is what's happened here. So from this perspective, this has to talk to us. The first reference point would be 133.40, because you can see that the wave is trying to cross through the tunnel. I think this area is going to be retested on Monday, and we will see the resolve. So if we break 133.40, we're going to come down here to 131.40. If we get some sort of resolution, this consolidation here is going to ratchet up into 136 and a quarter, 136 and a half. So those are your numbers on the 4 hour. Just keep making a note of all these, set all your alerts. Let's go back in here on the 4 hour, and let's just get rid of these little boxes because it's going to distort our hourly. We can leave the daily because those are still relevant. So on the hourly, we can now see where are we. So this is going to be your opening range on early Asia Monday, 133.80, 134.80. So a nice 100-point range. There it is. But the downside is going to be tested. So we are going to have a fill the gap trade that we are going to be looking for. I can see on this move here from swing low to swing high that would coincide with approximately this 38 to 50% retracement area in the wavy tunnel. And so that would be our first reference point to see where we are going. Are we going to have a continuation and back up to 135.70 area, which would then obviously coincide with our target here. We've talked about that level on the higher time frame as a possible sell level. I've got a nice clean structure in place here. So when I talk about my method of Elliott wave, I always look at and I break down the awesome oscillator. So if I had a line there and I had a line here, that's my wave one. So that's my wave one. That one, when I have a crossover here, I go to the high point. So that's my first break there. So let me just move this down for the sake of argument. So there it is. And the crossover here, I just look for the low point to the left. So when you cross over here, you look to the high point, and when you look here, you look for the low point. That gives you your retracement levels for that first event. So there's breakout one, you've got the wave two, and you're looking for wave three, which is usually the most explosive. It took a while to come to fruition, but bang, there it was. What I keep telling you as well is this has a 90% probability of reaching a 270. There it is. It did take a while, but it got there. And there were plenty of opportunities in here to get long. So obviously you're observing on the hourly chart your retracement values, and these would be alerts on your system, where you would look initially at this area on the pullback here. So you'd be looking in this area here, which was your 61.8. Obviously this was something a little bit stronger, but then what you do is you start getting flags, and you can see the trend line, which are flags, trend line, whatever you know, different terminology. You get your that give you the opportunity to buy trades. This starts moving up into a 45-degree angle. When it's messy and choppy in here, difficult to take trades. Unless you've got a trade from here, you survive. Because on a risk management perspective, if you buying at 131.82 in this zone here, and you're finding the trade on the lower time frames, so I'll remember that value, 131.82. Let me just put a line in it there on that candle. Your stop is below. It's a bit rich, 30 basis points, but we're taking small positions in this market and you survive. And obviously, when you start breaking above certain thresholds and you break the highs, you always bring in your stop loss to at least break even plus, so that it just becomes, it's always nice to have two in these kinds of trades so that you can have a runner. So, and what a runner does is you just follow it and you just keep moving. Every time you break a high, then that becomes your stop. And you keep breaking highs, and there you got above the wave and the tunnel, and that becomes your stop, because your objective is in here. So when you've got your objective, you're either taking profit or you get very aggressive on your stop loss and you bring it just below there. You get that explosive move. Now that you know that this was your target, you know anything above here is going to be just bonus money. So you want to probably maximize that. So start getting even more aggressive on your stops. And then you could see that when you came and broke this area here, how we consolidated, and you would have found a lower time frame trade in here for continuation. And another one. And so that in essence is just how we go about, like how I go about framing up my charts, just to look and identify all of those levels. So we talked about that 131.82. And I just want to, I've probably got to go 131.82. It was probably in this zone here where you were looking for buys. 30th of March. It's going to be too much. But the point is, it's the same. On the higher time frames, you are looking at the higher levels and for your targets, and then you're going into the lower time frames to go and find your trades. So here's an example on the 5 minute. Breakout one trade. There you go. Bang. To the point. Your 90% probability, 61.8. So my observation in this, in sterling, is it achieves its 270 target a lot of the time, and it really likes 61.8 as a retracement. So that's valuable information that you are collecting for all moves. It might not work in all time frames, but this is why you go and test all the theories, and you go and see how that can be implemented into a trading strategy that then overlaps with the Wavy Tunnel framework. Like I said to you earlier, you have an impulse up. There it is. There's your 90% probability. Bang, what did it do? 61.8. So you can see every time, and this is how you go and test the theory. So don't just believe what I say, go and test the theory. So the next move came, there it was, there was your target. Where did this one come, this pull back into? Initially 61.8, went up, couldn't break the high, came back for a second look and went a little bit deeper, but then it ran into my second point that I'm always, but your first one again was 61.8. Now this one was different. But now you know that this is the last leg, right? Because you've got 1, 2, 3, 4, and this is now the last move. So, and this one, when it broke out, went straight to the top, broke through the highs, and then went straight to the top. You never got in an opportunity. You probably might have had a small opportunity when it sort of pulled back into the wave, strong 45-degree angle. But same thing, like we talked about last week, when the price moves too far away from the tunnel, you swum out too far. The lifeguards are shouting you back and saying, you need to come back to shore. Come and catch your breath, let me have a look at you. And this is what happens. When you pull away, it needs to come back. It needs the safety of the wave. So it wants to follow this. It wants to track this. But there were multiple setups in here. There's one. And again, you would have been using Fibonacci. If you're not getting that, you've got the wave and the tunnel that are giving you support. This is 45-degree. So you're still looking for longs. Yes, your risk management gets a little bit challenged because your stop has got to be below the low. But the closer you get to the low, the easier the risk management is. And then off you go. So we've defined our levels in sterling. We know what we are looking for broadly. And this market's going to pull back. The dollar's going to see some strength on Monday. We are probably going to start in this range here. I don't think we get above 135, and we are going to come back into this 132 area. So that's the narrow range. We can see that this market, the wave, this is the key area here on the 4-hour chart. So this becomes your pivot area, 133.50. So watch 133.50, write that number down. If we go higher, we obviously then looking at our swing high to swing low. And what did we say? We like 61.8, there it is. So 133.50 on the top, 136. That's if we get good news. And then I would look for trades in both of those areas on the lower time frame. Yen is always just a quick visit because yen is just to go and have a look and see how we're behaving around 160, and we still in play. Let's look at it on the 4-hour. That's my preferred one. So we've got a very clearly defined range. There it is. 57.5, 60.5. In between, we will have to wait and see. This is probably going to explode higher and go back to test the 160 area on Monday. The bungees are supporting that. The awesome oscillator is about to cross. So initially up to 160, and then we go and test and see how high we can come. Canadian dollar. We are currently negotiating this level where the close was, and this is a pivotal area on the daily. So this is your swing. So do we hold 138 and go to 141.5, or do we come and challenge the low? So those are your broad levels. Mark it out on your chart and we can have a look. You're going to see how this is going to coincide here with what we said earlier. There's our move. What's that level? There it is. Our 90% probability trade is there. So sells around that level. and as long as we stay above 134.78, that is going to be our target. What does that all look like on the 4-hour? We can see this is flaggy. You've got the wavy tunnel trend lines which are guiding you. Now we're at the tunnel, and we've got the top of the wave, and we've got a consolidation area where we've been oscillating, and we need a breakout. So breakout below 138, which we highlighted and found on a higher time frame. We then, if that does not hold, we are going to come, I'm going to measure that move there, and I'm going to say we are going to then initially target 137 and a quarter. So if we break below 138, 137, 137 and a quarter, if we hold, we go back to test the highs around 139.75 and extend into 141. There it is in a little bit more detail on the hourly. So in a chop, not much to do here. Identify your levels, look at what the wavy tunnel is suggesting for you, refine and tighten up your levels, keep going, and to see where the possible trades are, and to see, again, you're going to have to wait for the openings and to see where this market is going. But that broadly is or are your levels. What I've neglected to do before when I added it is look at an emerging market. So the Mexican peso, which is what I think, I've never looked at this, just so you know, the truth be told, and so it's going to be interesting for me. But again, the setup doesn't matter what it is, because if you take away what that is at the top, it doesn't matter. This could be any chart. The only thing that it's going to do is people that trade this is you going to want to see what it likes. So initially I've talked about on sterling it likes 61.8. On euros we've always said it likes 0.70 to 75, so it wants it a little bit deeper. So that's what you're observing on these charts. You can see that this peso has now, I can see it likes deep retracements, just the first observation. So it likes deep retracements. I want to look and see what this behavior is. So it always gets explosive on the top side. So this is weakness and the dollar strength that's coming through here. And then you can see that it grinds down so as things. But so tomorrow, this is probably going to go back to 1883. So that was be a level I would be watching. We've got a low in here at 16. We've got a low in here. So 17, let's call it 17, 18 to begin with, but I'm probably going to favor a move back up to 18 and a half. See what it looks like on the 4 hour. We've been in a little bit of chop, difficult to get these trades. You see this is a good example of where you've got a flag in place or a trend line, and you are anticipating that you've got a strong move down here, you've got a retracement, and then you're probably looking for, you got your third leg, but it never really extended, things changed, and then you would have had a breakout trade to the downside if it broke that trend line, but it never did. But then what happened is the wave went back into a 45-degree angle, and so it chops around. So you're looking for positions back into the wave, back into the tunnel for then continuation. Here you had a fill the gap trade, back into the wave. We couldn't extend further, so this becomes a pivotal point. And what's happening here? It's rolling over. It's rolling over. And the bungees are also indicating that that top was maybe a short-term top. This was rolling over. We cleared 50%. So you were looking for trades to sell into that area. 17.95. There we go. Let's go and have a look. 17.95. So what did that show us on the hourly? There it was. Breakout. So we had breakout 1. There it was. Pull back into the wave and the tunnel. Let's go and have a look and see what that retracement was. I would say it'd be quite not as deep as 61.8, because that was an aggressive move down. So that's another observation with me. The stronger the first impulse lower, the less the retracement value is. So when I mean less, it will struggle to get back above 38.2 and add 50 into it. And where did it stop? That's where it stopped. It went into a consolidation area here, and you were looking for breakout trades. So you wanted to close it back above there to go and retest the highs, break above, break below there, come back in there, and then there's your trade. This rolls over, it becomes 45 degrees again, and off you go again. And you play it all the way down. And then this is where we are now. Let me just go to the 4 hour and take that one off so we can have a clear look at the chart. So what have we got here? We had a I've got to get rid of all these fibs that I've got on thing, otherwise it just becomes confusing for everything. So I've got to get rid of that one and go back to the hourly, and there we go. So now we can see that we have our swing high, swing low, royal to royal, and now what have we got here? Quite an aggressive move down. Tomorrow I would anticipate that this is going to rebound and come back into a fill the gap trade. So your first area that you'll be looking at is around this 1760 area to 1775. So this is an area where there might be, this is going to be your pivot area. And you get to decide what to do in this zone here. You get to decide, is that a fill the gap trade and a continuation back down, or will this have now exploded higher? The wave will be rolling over. The bungees will be rolling over and coming back to this 50% mark. So this correction here, back to 38.50, is going to tell us where the next move. So that becomes your pivot area. So there's your pivot area for the Mexican peso. So those were the currencies. I don't know if people want to have a quick look at the Aussie dollar. So we can have a look at the Aussie dollar. Remembering that tomorrow the dollar is going to correct higher. And so this means that the Aussie dollar should come off a little. So the Aussie dollar will come back into the 66.70 area as a first area of support. You can see our top, you can see our bottom. We've got our primary move here. So this is what we're looking at. So any pullbacks and any dollar strength, that would be your target area, 67.50. Dollar weakness, we go back to the highs and see if we go for another royal. The wave has crossed the tunnel, but in these markets that we're experiencing at the moment, you just need to be vigilant of the possibility of we are susceptible to news flows and tweets. And so, like I said, I think tomorrow we're going to come back into the wave. This is at a 45-degree angle. So you can have a look at the 69.75. for possible continuation to go higher. But if we start breaking below that, you're going to get, so here's your target. If we don't break above the highs at 71.78, this is your target area. So you can make a note of that number. If we are going to, so what I told you is we're going to come lower tomorrow morning. We're going to come back into the wave and the tunnel. So now you've got your numbers here, which correspond with 38 and 50% retracement value. I would anticipate that we could come a little bit deeper on this one, because I can see that the pocket is more in this zone here of 69.40 to 60 area. So what we're going to do now is, so that this becomes an area for you to look at. So observe and see what happens at that level. If we hold this level, you can look for setups for a retest of the highs. If we break below this area, all this is going to roll over, this is going to roll over, and we're going to come down into that zone there. And those are the levels where you start looking for your trades. Let's just do one more. Let's do a cross currency and see how this is going to play out. So euro yen, so what we might see tomorrow is we're going to see some euro weakness and some yen weakness, but this will test to see which one is going to be the weaker of the two. So first port of call, 186.06, a break below there. What have we got on this? Look how far we're out to sea. We're far away from our wave and our tunnel. What are we thinking? So I can see our first impulse up. There it is. We hit our target. We've overextended. I'm going to suggest that this move is now going to come lower. And we are going to make a 61.8 to 70.70 correction. And we're going to come back into this zone here. You've got another number up here. If they were to make a last-ditched attempt to go higher, there it is. I don't think it's going to. There's momentum in here, and you can see that move. But if you get a pullback into the wave, it might have one final push higher into that level. So watch to see what it does on opening. See what it does if it comes back in. You've got a trend line. You've got a tunnel. You've got the wave. You've got everything helping you and supporting you. So you can see that that number there is going to be your first port of call. If we hold that, we could extend. So it's going to oscillate between that high and that high. If we don't break, if we come back and we can't break back above there, we are going to play in this range here. So again, just frame out your charts, see how everything's going, and then we can go from there. Lastly, we're going to look at our futures, which I use Ninja for. And this is what I wanted to show you earlier, but we had done it on, I did spend a bit of time on it, and I've got 3 tabs here on the NQ, and this is the weekly chart. So this is the big picture. And now there's nothing on here other than the chart. And this was just to show you there where you've got a first impulse. And this is again where it shows you first impulse. Where did we come back to? 61.8. There's our target level, and we extended further. What have I got on the second one? Well, there's my second move. Where did it come back into? 61.8. There's my target area. So I'm building up information on how the NASDAQ behaves. So this is the last one now, and this is where we are currently. So There's an objective at 29,452. Are we going to go there now? No. I'm actually going to say that. No. Where is our first port of call? 61.8. So it's this one. And I've kept saying that I think this market comes down into the 20 zones, and I'm going to continue to say that. Although trying to trade these markets, I've observed in the last few weeks that I don't know if it's two greater option positions that are out there that are protecting the downside, and this is why it hasn't come down to any great degree. Or like when I was trading the rand in South Africa, and let's say if all the market participants had the same position, we all had the view that the dollar was going up, and so we were all long dollar, short rand. But if we all had the same position and there was no natural flow, we had a stalemate. So the dollar just got higher and higher and higher, and the rand didn't move because we were all positioned the same way. Now the trick in that scenario was the one that got out first got out the cheapest. Because once I went and triggered somebody else, that would trigger somebody else, and everyone would have to exit the ship. And this is what happens in financial markets. And that's the observation I'm making at the moment. This market comes down. I saw it on Friday. It was pushing down. There was no agreement. There was nothing. But this market didn't want to go down. And we were going into a weekend. And we were going into negotiations. So you would have thought, but it didn't want to go down. And so those are just observations that you've got to make, that you've got to be mindful of. You know, when you've got a wavy tunnel thing, you're more a technical trader than, you know, technical and fundamentals, but you've got market behavior and how does price action and sentiment influence and impact the market. And that's what you've got to watch. And that was just the purpose of showing you these three impulses, how the Fibonacci tool works, how that gives you a level, and how that will then help you in finding a trade on a lower time frame. So now I will just switch it over to the 4-hour chart with Wavy Tunnel, and we can see. So there was Friday, and you could see this market was, it didn't want to go lower. It didn't want to go lower. It just sat in this range. I would have thought that we extended and filled some of this gap from the move up that we saw. So you can see, if I'm trying to do a fib, that's why sometimes I say I'm cheating when I put the fib on, because I haven't got a crossover. So I haven't got a high. So when I put the fib on this, I'm just guessing. So I could always do my first one, like I've said to you. Then this had a 50% pullback. There's my target, which was achieved there, and we've got that. Then we moved into the second one. There we go. There we go. There's our target up there, but we meandering and around this area here. So what I would do on this at the moment, because we had this big move up, I would do that. And what I'm going to be looking for now on Monday, we're going to come down. Because unless in the next few hours there's a breakthrough in negotiations, but I doubt it, because the American team are on the way back to America on a plane. They've stated their position, so we can see where the first area is, and there it is there. So 24,927 is the pivot point. What have we got there? We've got our wave and our tunnel that are waiting for us. We've got our 38.2%. So we've got three things waiting for us. What's the other thing we've got here? We're far out to sea. We need to come back to our wave. We need the comfort to say that we're close to shore. So this will become your decision point zone here. So mark your chart up, put this on, because then as you go into your lower time frames, these should stay on, and that will help you in doing your analysis, because you can see it's all framed out now, and you start on the higher time frames, then you go into lower time frames. What is the other observation I can see on this chart here on the hourly? And you can see how dead Friday was because of this massive divergence. Market was just probing. Market's got enough put protection. What's happening? Whoops. That's the wrong box. Can I move it? No, I can't. Delete it. And now I need another one, because you can see that the bungees, they're all at the top. And you can see stretchaways, but they got pulled back into the stronger bungee elements of the oscillator. Kept putting, so green and yellow did not roll over. They kept, green had a little look and decided, no, that wasn't for me. So I think on Monday in Asia, when they open and America start coming in, that's your first port of call. So we're going to, it might gap down. The gap size, I don't know, because I think the market is very enthused about what's going on and what might not be going on. So first port of call, 24,925, and failing that, a bigger one. But that's only a 38.2% correction of this. What have we noticed in this? If you look at this chart, going back, nearly 10 years, we don't have too many aggressive pullbacks. So, we talk about, so, and this is why this observes. So watch that number, bigger support. You can see then 50. So you've got all these numbers with the Fibonacci now that's giving you help. And then you just drill down into the lower time frames and go and find your trade. Unfortunately, you're not going to be able to get into this one because it's just going to gap lower on Monday. And that's all that's going to happen. It's just going to gap lower. Let's have a quick look at the S&P. The song will be the same though. The song will be the same. It's going to gap. It's going to gap lower. Same thing. Same thing. But let's get your levels. Again, you would be framing your swing low, swing high. You've got your wave and your tunnel again at 38.2. That's your first decision point, 66.84. This market's too high. I'm going to suggest to everyone, watch this area here around 168, because that for me is going to be, so below 68 I'd be short, above 68 I'd probably be marginally long, but look how close we are to record highs. Now would you say that we'd be close to record highs in the environment that we're in? No. I know the stock market is not a barometer, is it's independent, of it doesn't observe the same forces. So but you're near record highs where you nearly have a nuclear fallout in the world. Not possible. So something's got to happen. So use 68 as a pivot. So below 68, we've got 67, 68. Below 67, we're going to come back down into, I think the lights start going off when we get, and when I say the lights go off, I mean this loosely, I mean a deeper correction. So I think it's around 62.5 is a number that I've been watching. And that will be borne out by what we see on the higher time frame. And there it is there, which is just below 38. Is that a big retracement? Not really. So I would think we are going to, in the S&P, come into this zone here. Again, remember, this is just for educational purposes. It's my own personal interpretation of how I look at charts, how I analyze charts. And so you just observe all these numbers. These numbers are also something that I don't discuss here, is I look at all the options flow. Because without looking at the options flow, you're shooting in the dark. But this is only for people that are trading futures and equities. And let's have a look at oil, because this is the driver. This is what we're all talking about. This is what we're all worried about. There it is. We did absolutely nothing. The world was zooming along in this range, and then we broke out. The likelihood of us going back to that range is probably going to take this length of time. So I would say, so here's my swing low, there's my swing high. I think the US is better equipped to survive higher fuel prices than the rest of the world, but that remains to be seen. You can see where the sweet spot is. So this is going to be the area where the market is unlikely to get below. But I think the world will be happy if we settle below 100 and in this 85, 95 area. There might be the odd occasion where we slip to 75, but are we coming back into this? I don't think so, not for a while, unless we have real love and peace in our time, and everyone comes on the same page, and then we get into production and output quotas, and that becomes the topic of the day rather than the Straits of Hormuz. So that's the insight for Monday. That's your setups for Monday. Any questions, just fire them off and let us know how we can help, assist. If there's any questions that have arisen out of the analysis that I've given you, please just shoot us an email. So with that, I'm going to wrap it up. Wish you all a successful week. Stay safe and speak to you soon. Bye-bye.